Well, here we go. It's about time to start another exciting week. We'll see what happens with the various markets. And let's start with Tesla news. Dan Ives today saying that the 8-8 event, when asked about how important it is, he said, listen, on a scale of 1 to 10, the importance is an 11. And I agree with him. I think it will be the most important event in the history of Tesla. He says autonomy and a sub $30,000 car are what he expects, and expects these to be huge game changers. He actually still has Tesla just at a $300 valuation within the next 12 to 18 months. Obviously, I think that's low. He also expects a substantial uptick in China BEV sales, including for Tesla. If autonomy is solved 100% and robo-taxis are rolled out and Tesla is sub 400, I think I'll give up the show and watch Jeopardy for the rest of my days. So keep me to that. Would you hold my feet to the fire on that one? All right, put that down. Make a note. Sawyer Merritt says, news: Tesla ranks highest overall. This is not going to be a shock, but it's always nice to get these. Tesla ranks highest overall and highest in the premium brand segment of the EV mobile apps customer satisfaction, with a score of 847 on a 1,000-point scale, according to JD Power. Can there be any doubt? You know, when we're listing the things that differentiates Tesla from everybody else, the app is just amazing. It's just absolutely, no, it's kind of like one of those things you don't think about anymore because it just works and it just does everything that you could possibly hope it could do. And I'm sure that they'll be improving it and increasing things in the future. Teslarati has this out today. Formal sales of the updated Model 3 Performance in China, priced at the same 46,380 as when pre-sales begin at the end of April, but the delivery date has been moved out. Tesla has begun formal sales of the Performance in China after listing the model on its China website and starting pre-sales in April. Effective immediately, the Model 3 Performance will move from pre-sales to formal sales, with first deliveries expected to begin in mid-June, Tesla said today on Weibo. Tesla's Chinese website listed the updated Model 3 Performance on April 24, went on pre-sale shortly after. Local deliveries, keep saying the same thing over and over again. I think I've said it. Okay. Now, here's an exchange that is also almost impossible to overstate how important it is. Elon says today on X, the AI robot future is coming fast. And Pierre Ferragu says, to that, he says, oh yes, so many building blocks are getting together to make it possible at the moment. Mind-blowing. Interesting to note, a single team is working hard on solving the hardware for an affordable robot, an overlooked critical enabler. And he has I forget what the emoji means, with his tongue sticking out, big smile. Anyway, so, you know, I believe it. Maybe you believe it, but what does it mean for Tesla stock? The day that the day that we see, well, I don't know. What will be the catalyst? I'd love to see. I think it was our own Scott Walter who suggested that what you would want to see is you give a delivery to your place of business. You've ordered the robot. You open up the box and the robot just gets out of the box. Maybe his arms are not on yet. He puts them on, screws them down, and says, okay, here's what you need to do first. And you have a conversation with it as it proceeds to self-train its new owner as to how it's to be used. And then the owner can go and give it the specifics of its workplace. I mean, come on, this could happen. This is really possible. And I think we're going to see it. Anyway, the future is amazing, and the stock price of Tesla will be off the charts. Ford's Farley today said that hybrids are not a bridge, but will be a part of the lineup for years to come. Okay, Mr. Farley, I'm sure you're right. I have to admit, I have some mixed emotions about hybrids. My brother has a hybrid. I know others who have hybrids. I have mixed emotions about how long or how valuable they are. I know that the big question is always, why would you want to have two chains? Why would you want to have two sources of power in your car when you can do it with one? It makes no sense. It's an additional cost The best part is no part. Yeah, I'm not sure. I don't know. And I've commonly thought maybe I need to get deeper into that question. Obviously, Toyota think hybrids are going to be around for a while. Ford thinks hybrids. I don't know, but my gut tells me it's going to be all BEVs within 3 or 4 years. All right. That's my gut. In other Elon company news, given the pace of technology, he says, given the pace of the technology improvement, it's not worth sinking 1 gigawatt of power into H100s. Rather, he says, XAI will put 100,000, they will do 100,000 H100 liquid cooled training clusters online in the next few months at XAI. But the next step would not be H100s. That would be 300,000 B200s with the CX8 networking next summer. Let that sink in. Okay, so, all right, this is Randy Kirk. Hit the like, hit subscribe, hit notify. Why do you want to hit notify? Well, tomorrow's Brian White Day. That's always fun. Of course, we'll have the regular news after the bell early in the morning. I have moved that up a bit if you haven't paid any attention. Maybe you like the new time. I'm not sure. Usually I'm now out at closer to 7:30, 7:40 rather than 7:10. Gives more time. There's some stuff that comes in about that time. And so let me know. What do you think? I think it's a better time, 7:40 California time instead of 7:10 California time. Let me know what you think. All right. OPEC has extended its production cuts rather, through the end of 2025. It announced that Russia and some of the others have been violating their pledge amounts. The market has barely budged. We'll take another look here in a minute, but the market barely budged on the news. As previously noted, OPEC seems to want to keep the pricing around these levels, give or take 15%. I think 65 is probably the low they'd like to see it. I think the high they'd like to see it is no more than in the 90s. That's where it's been for a very long time now. And I think they're trying to manipulate the market as best they can to keep it in that price range. They finally got smart enough to realize that if they're going to have some power to manipulate the market, they should manipulate it to where they get the optimal amount of money per gallon or per barrel, however you want to do it. All right. What's coming up this week? Well, there's all kinds of crazy stuff. So first of all, on Monday, we've got the S&P Flash U.S. Manufacturing PMI. These are the purchasing managers who are saying what is happening to them. What are they seeing? What are their expectations going forward? Last month, it was at 50.9, which is a good spot. You want it to be above 50. The suggestion here is, by those polled, is that it will drop to 50.7. This would not be a good thing, but based on what we just saw from the Chicago folks, which I reported on, I think Saturday morning or afternoon. Anyway, the Chicago numbers were not good. That was Friday night. The Chicago numbers were not good, really bad from the manufacturing sector, as well as, in fact, from all sectors. Then we also get construction spending coming in that day as well. And that is expected. Last month, it was down 0.2%. Folks are thinking it'll be up 0.2% this month. Not clear why they think it'll be up, because we've seen a lot of softness in housing construction and certainly in apartment construction. General government construction, maybe, I don't know, not sure. Anyway, I don't have a lot of information on that to help make a better thought on that. Then we've got ISM manufacturing, the actual estimates coming in there. That's expected to go up a little bit from 49.2 to 49.6%. That would be, a good number. We'll see what happens. All right. Auto sales numbers coming also on Monday, 15.7 million last month. No estimate from the pundits this time. Based on what I've been hearing, I might think it's going to be going down. But remember, these are sales going into the dealers, not the sales going through into the consumer's hands. So I'm pretty sure that's true of this particular number that's going to be coming out on Monday. All right, what happens on Tuesday? We have factory orders coming out on Tuesday morning. Last month, those were up 1.6%. Now it's expected those will be up 0.7%. Again, the question is, will they be up at all, given everything that we're hearing right now about manufacturing? Job openings numbers come out on Tuesday. This is a very important Fed number. As you well probably remember, they were over 10 million job openings a couple of years ago. Well, probably a year ago, there was over 10 million job openings. That number's been coming down steadily. The Fed would like it to see it come down. It would like to see it come down a lot more. What is being projected by the people who were polled is it'll come down from 8.5 million last month to 8.3 million this month. That'd be a fairly substantial drop, but still not getting anywhere close to something you might call a neutral area. All right, then on Wednesday, the first employment day is ADP employment day. Last month came in at 192,000. That was considered a little bit hot. This month, the pundits are projecting 179. I have no reason to know one way or the other, except that it seems like employment is slowing down. So this would not be a shock. ISM services coming in on Wednesday also last month at 49.4, expected to be up to 50.7. Then we have my favorite number of the month always is the productivity number. By the way, that number is being revised. So this is a final revision. It comes out in April for the first quarter, then it's revised in May, and then revised for the second time and the final time in June. So this is still the first quarter productivity number. It was at 0.3%, which on the last revision. The folks that pay attention to this kind of stuff think it's going to drop all the way down to 0.1. This would not be a good number in terms of inflation, would not be a good number in terms of the overall GDP or anything. This would be a very, very tough number and not bode well for how things are going. This would be another stagflation potential problem. As you know, I'm expecting productivity to go up dramatically. So this is shocking to me that we'd be seeing this kind of a productivity number. We'll see. We'll see what happens on Wednesday. We'll also get the U.S. trade deficit. Last month, that was 69 billion. They're expecting that to go up a lot to 76.3. Typically, when the dollar is strong, you're going to see a lot more imports than exports. That is part of the disadvantage of a strong national currency. Then we also have the S&P Flash U.S. Services PMI last month at 54.8, barely changing according to those who are guessing at 54.7. Thursday, we get initial jobless claims as we do every single Thursday. Last month was 219. That was considered to be too warm. I'm sorry, that was considered to be, what was that considered to be? Oh, a little better, but folks are thinking it's going to go down. This would not be good for the Fed's plans. Going down, initial jobless claims to 216 if the polled people are correct. All right, Friday, consumer credit number comes out. Last month, 6.3 billion up. This month expected to be 10.7 billion more up. This is not what we want to see. We would like to see the consumer backing off of making purchases on credit cards because they're already extended a lot. Also that morning, we've got wholesale inventories. Last month down 0.4, expected to be up 0.2. Wholesale inventories would be an indication that if they're going up, is either wholesalers are getting better balancing things, or it could mean that they're not selling through as fast as they would like them to. All right, then of course on Friday, the big report, that is the U.S. employment report. Last month, we had 175,000 folks added to the workforce. This month, the polling is saying 178,000. This is directionally not the way that the Fed is going to want it. They're saying the unemployment rate would stay at 3.9 from last month, 3.9, and that the hourly wages would go up from 0.2 last month to 0.3, also directionally incorrect if you want the Fed to cut rates. Then we have hourly wages year over year. Last month came in at 3.9, much stronger than well, not much stronger. I think the Fed would actually like to see it at around 0.25 on a month over month, and at around 3% year over year. Yeah, so 3.9 would be way too strong. We'll see what it comes in. All right. That's all the reporting that's coming in next week. So last time I checked, the pre-market was flat, although the Dow was up. Let's go ahead and take a look and see where things are now. We will start with, what happened here? We will start with bonds as we do. The 10-year is down 1.7 basis points in the pre-market. The 2-year down 2 basis points, sitting at that 37 basis point area we talked about the other day. That's kind of 35, 37 is kind of where it has been in middle ground. It's gone up from there recently, but now come back down to the inversion being closer. The 2-month, on the other hand, is getting wider and wider. It is up 1.8 right now, getting in the 90s now, almost 100 basis points inversion. All right, we've got the oil market, as mentioned. The oil could be impacted, but only down 23 cents. But at the range, in my opinion, my range that I feel about oil, 67 on Texas Intermediate, is 67 to about 91, 92. Right now, it's sitting at 76, 77. Now, in the recent 3 weeks, 76, 78 would be at the lower end of the more recent range. And Brent also down 23 cents at $80.64, under $4 now of difference between the two, if you're paying attention to that. Natural gas up 3.32% in the pre-market, back to 267. But remember, it was much higher than this a couple of weeks ago. Although, no, this is actually, we're getting, I think it was 270 something. So we're moving back towards where it was at the high. We have gold at this point, unchanged, at 2,345, silver up 0.38, and copper up 0.63. Copper is at $4.63. Remember, it was over $5 at about $5.12, $5.15, something like that. Okay, we've got the dollar sliding. If I look around, I wouldn't say it's sliding so much. I would say it's kind of middling. We have got Bitcoin up 92, not much change, 67,783, kind of in the middle of its trading range. I don't know if you saw, if you care about Bitcoin and you really want to get some in-depth analysis of Bitcoin, the All In podcast on Friday on YouTube, you can go look that up. They talked a lot about it. I guess there's been studies showing that after the halving, it takes about 2 months, 2 to 3 months before it starts to go up again. So there you go. That's all I know. Don't look at me on Bitcoin. I'm not certainly recommending it. I'm not giving you advice one way or the other. And of course, I never give you financial advice on this channel. So we've got the pre-market. We've got the Dow futures up 69 or 0.18%. The S&P is up 7.75 that's 0.15%. And we've got the NASDAQ barely up 6.75 or 0.04%. So the equities moving up in the pre-market right now. We'll see what happens in the morning. All right. Once again, I do want to tell you that this morning I did an analysis of what I think is going to happen in this year, the final, numbers for Tesla this year, and in terms of unit sales, in terms of average selling price, in terms of the, what's going to happen on the bottom line, the profit, what that's going to do to the stock. Only about auto, energy, and services, just the basic pieces. Same thing for 2025 and 2026. These are my estimates. They're pretty darn conservative. I think if you take a look, you'll see that. Anyway, the card will be right here. And then if you would join Patreon, that'd be fantastic. Thank you for multiple people that have joined this week. And hopefully we'll get a bunch more tonight, right now. This would be a great time to help out the channel. And as far as the price of Tesla, we won't know anything until tomorrow morning. It's been great talking to you.